Tesla has had a rough year and it's just getting rougher. Some on Wall Street are saying Tesla's chances at being valued as a software company are rapidly fading, which means a much lower multiple for Tesla stock, which means big problems for Tesla shareholders because the stock will fall hard if that is the case. So let's talk about exactly where this is coming from, exactly what the actual truth is on this matter, and I'll give you my take on where this argument actually shakes out and what it means for Tesla stock. Just make sure you like the video if you like getting the truth without the hype. All right, so we're going to react to a video here today from a Wall Street guy. I'm positive you guys all know who the gentleman, at least one of the gentlemen, are on this particular clip here. And this is exactly what they're discussing. What is going on with Tesla stock and why it may no longer be a software company anymore. It's kind of a debate that goes back and forth. And this honestly is a discussion that we have in my group all the time, where if you want to be a part of that and get in on those discussions, if you want to take advantage of the free coaching that we're offering right now, along with completely free access to the brand new stock course that just launched and 4 other courses, be a part of the best 6, 7, and 8-figure Discord out there, see all my buy and sell alerts in real time, see my watch list complete with price targets. So anytime I change Tesla's price target, you're going to see it in real time. And so much more, guys. Check out the pinned comment down there. Take advantage of the March Madness sale that's going on right now, because when it ends, it goes away and the price goes back up. All right, so let's jump into this video and see what these guys have to say.
Tesla's competed well in China. So what do they need to do now also to alleviate investor concerns? Take it to our next guest. Joining us now from RBC Capital Markets, it's Global Autos analyst Tom Narayan, and also Gerber Kawasaki president CEO Ross Gerber. Tom, first off with you, is
it just me, or does the Ross Gerber look like a politician of some sort with the fake smile and the, I don't know, maybe it's the hair, maybe it's the whole look all the way around, the, the tie and the slick back hair and all that good stuff. But I don't know. I was just looking at it there, kind of going, it looks just like a politician there, standing there with that big cheesy fake smile on. I don't know. Maybe it's just me.
What's wrong with Tesla stock right now?
Well, I think a lot of folks are looking at the China data and the stock selling off on the day, which happens from time to time with Tesla, right? I mean, but let's understand this is a year-over-year comp issue. They had Chinese New Year in February. They didn't have it February last year. We knew that volumes are going to be, not so robust in 2024. Elon called it out on the conference call. Really not very surprising. This is Model 3, Model Y, which is somewhat saturated. Really, investors are looking at the new affordable car that's going to come out in 2026. That's really what's going to matter for the stock. And honestly, this is more than a car company, right? It's an autonomy company, we think, and a mega pack company. So I think it's a lot of folks who are looking at a data point and maybe selling the stock on the day, a lot of retail investor activity. But folks should really understand what the stock is ultimately. It's not a car company. It's an autonomy company. It's a mega pack company. It's something more.
I think, Ross, you would agree with all of what Tom just said, as with a lot of our Tesla fans out there. But I would add now that, yeah, Tesla may be more than a car company, but they're starting to have to act like a car company, because right, if they're selling a car against, a Chinese import or a Chinese-made car in China that's $25,000, that sure looks a lot like a car company.
Right, and that's exactly the problem. Is I think investors are revaluing Tesla more as a hardware company than a software company, because they are having to resort to all the levers that car companies do to increase demand, other than their still failure to fundamentally advertise, which would make sense to me.
All right. I don't normally agree with Ross on much, to be honest with you, even though I think we're both bullish on Tesla. I just think we have 2 different reasons for being bullish on Tesla. But I can't argue there that, Tesla, until the vast majority of the revenue does not come from the cars, I'm not saying it should be valued as a car company, but to give these crazy valuations the other way, and a lot of folks on Wall Street are coming around to that, more importantly, that's just also not genuinely true as well until they actually prove it. Now, in regards to the advertising, he's been on that for I don't know, it seems like forever, probably just a year or 2, but it seems like he's been on that forever. I don't see any reason why Tesla has to advertise and waste the millions and millions and millions of dollars that Legacy Auto does in order to do that. Maybe that's something that comes in the future when you have, gigafactories all around the world pumping out cars like crazy. Maybe at some point in time you reach that, when you reach that level of scale. But right now they don't have to do it. Advertising wouldn't make any difference in regards to all the other problems that we're seeing with Tesla right now. That's just not going to matter. There's plenty. They're selling every car that comes off the line. They're selling every Cybertruck that comes off the line. For now, there's no reason to go advertising. I think you're chasing a lot for a little in regards to that. In order to really keep that demand going, though, you got to keep cutting prices. You got to keep staying competitive in those large markets like China right now. And that's obviously what's hurting Tesla.
But I think the bigger issue is China's a core market that's highly competitive, and Tesla's running into lots of competition there. And although it's a software company and a tech company, we still haven't completed full self-driving, which has sort of just been nagging on me for a while now because it just needs to get completed to add value. And those are the brand levers that
nagging on him for a while. Like it's not nagging on Elon and every other shareholder out there. Yeah, it's hard to do. Of course, we want it to happen. But I just find it kind of funny the way he kind of views it as something that's just nagging on him, as if, Elon's just slow playing it, while he does all these other things and he doesn't want it to happen anytime soon. Nothing can be further from the truth. This is where, Ross sometimes kind of gets me bent the wrong way.
Gave Tesla a premium, and between Elon's behavior and a lack of completion to a lot of these projects, I think Tesla's just coming down to earth to a much more reasonable valuation to where it kind of should be,
Tom, would you agree with the
tough one there? I hate to agree with him, but I can. I've always said that I don't think you should ever value it in the same multiple realm as Legacy Auto, because they're two totally different, financial set of financials. They're just couldn't be any more night and day. Literally, when you lay out the financials of a GM and then of Tesla, they look like two completely different companies. Like they would swear up and down that if you told them they were two automakers, the person looking at it, they couldn't see the names, would be like, no, you didn't give me an automaker. You gave me a tech company and an automaker, in regards to how things look. So right now, looking at a multiple, last time I looked, it was last week. I'll be honest with you guys. It was around 60 or so, right up in that range there, which to me, that's probably the right multiple for Tesla at this stage, if they can get those growth rates back up. But right now what's really killing it, and in terms of dragging the price down, is that EPS number continues to come down. We're not seeing earnings come through, which of course lowers the valuation. So even if you keep that multiple the same, obviously the price has to come down because you're not having those earnings per share there to keep that multiple or to keep that price up. So that's exactly what we're seeing right there. So unfortunately, I hate to agree with them, but I got to agree with them right there that I think that's, in terms of where I put Tesla at, that's definitely the multiple I apply. And unfortunately, with earnings decreasing, not increasing, that unfortunately means the stock price comes down as well.
Oh, look, 2024 was always going to be this period, a lull period, right? Between you had the Model 3 and Model Y. This is a tectonic situation, a multi.
Always going to be this. Always going to. I'm sure he modeled it in too, right? Just like all those other folks out there that keep telling you their models are flawless. Nobody modeled this in.
It's not a lull period at all. This is a Cybertruck period. That's why I disagree. We're selling Cybertrucks left and right. This should be a rally period for Tesla. Everything should be going right for Tesla, but earnings are going down. And that's the issue, is why are earnings going down when we're selling more and more cars and we have the most incredible cars on the road? And I think that needs to be addressed. And until they address.
Apparently you didn't listen to the earnings call. It was addressed. Yes, you're selling every Cybertruck, but every Cybertruck is at a massive loss here at the beginning of the Cybertruck ramp. That means earnings are going down, plus you keep cutting prices. That also means your earnings are going to decrease even more, despite the fact you are selling more vehicles than ever. You are delivering more vehicles than ever. So I don't even know where Ross is going with this, and this is where he loses me.
The stock is going to have trouble going higher.
Tom?
Yeah, I mean, if you listen to the earnings call, he was pretty much spelled it out, right? You have to look at this as a multi-decade thesis, right? This is a long-term play. Read the Walter Isaacson book. You'll really get a sense of how Elon thinks and what this future looks like, right? So the Model 3, Model Y, these are saturated brands largely. There's still going to be some growth. I think consensus has 14% growth in 2024. That's still significantly off the 40% growth that they did in 2023. But when you have the affordable car coming out in 2026, that's going to cost only $20,000.
What makes you think that's coming out in 2026?
I mean, that is the plan, right? The start of production.
Well, no plan has ever worked on time. We all know this. I've been in Tesla for 10 years.
Got to agree with Ross this time. He's right. Yeah, nothing's ever on time. 2026 is strictly a guess for all of us. Hope they get there. But yeah, kind of funny. I have to agree with Ross there on that one.
Plan has ever been on time.
So let's say it's not 2026. Let's say it's 2027, right? Let's look at the stock from a tectonic period from 2040 and then discount the cash flows back. My price.
Okay, before this guy even gets rolling, anytime I hear somebody say, well, let's look at 2030 and then discount it back, you lost me. You're purely speculating at that stage. That's how we ended up with $400 for Tesla at the height of 2021 was a great price for Tesla because, these, idiots had spreadsheets that showed out to 2030. Now this guy's going out 2040. Like, I don't know. The world can completely change by then. Tesla could be dominating the world. Tesla may also, not be anything. It may be a completely different company altogether. And all the projections are completely wrong. I mean, that's so ridiculous to even use that as a thesis for anything. 2030 is ridiculous. 2040? Oh, goodness gracious. That's something special right there.
It actually has 80% of the value in autonomy,
Yeah.
right? My car business is only something like,
How
less
do you
than
know
10%
Elon's
of
going to
the
be
value.
alive in 2040? I'm 53. I'm the same age as Elon. Like, when you talk multi-decades, we got to be around for this,
Again, gotta agree with Ross on that one. Oh, goodness. All right, so you guys can kind of see right there, I don't agree 100% of the time with Ross. You see how he makes some outstanding points. Even though he is a bull, he absolutely takes a guy that, these are the type bulls that I hate that come on here, the other guy. Where, well, if I project out to 2040, well, let me just project out 2080 then. Let's just go big here. Let's go 2080. By then there's no cars. And so my guess is, and it just gets stupid. That's the sort of stuff that gets us in trouble as investors. We can't see anything beyond the next couple of years and what Elon guides to and what the company guides to. And that's pretty much it. That's all that we have to go off at that stage. So when you're looking at things like this and you're hearing things like that, you got to ignore that sort of stuff. Ross makes some great points. Now, I never thought from the start Tesla was going to be valued like a software company. There's so many things that have to go right in so many different areas that to me, it was like the other guy was saying, it's a multi-decade thing for them ever to be able to reach that type of multiple. However, there's no doubt in my mind that they should not be down in the, car company range or whatever because of the financials, because of how everything else looks. And because I do think energy storage and some of the other things are going to continue to pick up and start to eat up more of that share of what's going on with Tesla in regards to not only revenue top line, but also bottom line profit as well. But we're not there yet. We're a long way from there. So to me, the multiple is kind of a hybrid multiple there. If you want to give it a 60, that's kind of where I have it right now. I'm okay with that, but that's only because I'm expecting large growth in the future. If we never get back to those 40, 50% growth rates, that thing's got to come down, more in line with a 30, something of that nature would be what I do. But I can't disagree right now with somebody who wants to put it at a 30 today, because that is where the revenue's coming from. So I already think there's a lot of pressure on Tesla to be at that multiple level. Right now, we can see it's kind of falling out in that 60 range, but I do think if this continues on and if we don't see autonomous come anytime soon, and then if we also, even when it does come, it gets hung up, and what I think it's going to get hung up in all the political BS here in the US and a lot of other stuff like that, a lot of those things are going to continue to drag that multiple down for Tesla. Now, for me as a shareholder, it doesn't matter over the long run because I think there will be so much revenue there when we get out of the current macro cycle that we're in for car companies in general. It's not going to matter on that back end. I think energy storage is going to continue to boom and continue to be a huge boom for Tesla. And there's a lot of other things as well that might very well come in to fill those gaps in the meantime. Obviously, the $25,000 car, whatever the heck, you want to call it Model 2, whatever you want to call it there, that right there is another thing that obviously the margin is going to be thinner on that. But again, a lot more coming on the top line there, again, pushing the valuation further. So there's a lot of things coming here. But for me, I never had them as a pure software company to begin with. I never had that as part of my bullish thesis for them to become just this software beast. It's always been kind of a hybrid for me. And it looks like that's pretty much where Wall Street's putting it right now. And again, we'll see here over the next few years if they can execute to some things can kind of fall in line for them. Maybe we get a little bit of a premium of that. If we don't, I'm okay. I'm not basing my valuations on that. And if you guys are basing your valuations on very conservative multiples as well, chances are you're going to be a very happy shareholder in the long run. Now, if you have one of those folks to where you thought, hey, I'm going to buy $1,000 worth of Tesla and I'm going to retire a multimillionaire by 2030, okay, then you're probably going to be disappointed there. But for the rest of us who are much reasonable, Tesla is going to be a great stock for us in the future here. And these times like we have right now are times for us to just add shares and continue to be disciplined with our approach and be patient as they work through this particular period of time with Tesla. And remember, if you want to be a part of my group and see my buy and sell alerts on Tesla in real time and see my watch list complete with price targets for all the stocks, including Tesla, make sure you check out the pinned comment down there and jump in on our free coaching. Jump in on our live Q&As where you can talk to me and ask me anything you want, or slide into my DMs and ask me anything you want. Be a part of the best 6, 7, and 8 figure Discord out there where you got, literally 1,000+ people helping you every single day with your investing, your plan, understanding concepts and everything else. Guys, there is so much in there. Check out the pinned comment down there and see if a membership's right for you and take advantage of the sale before it ends and the price goes up. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.